Blood in the water, indeed. The all-share index has also been very much in the red. The open of the market today was down 3%, but it's pared some of those losses, still down quite substantially, over 1%, close to 2%, somewhere there. There's absolute panic in the global markets. This was not seen coming, and as a result, we see that the Chicago Volatility Index leapt 20 points. Previously, it was hovering in the mid-teens, but now it's around 35 index points. So that's quite a substantial jump, and it shows you just how much panic there is in the market. But our question to our analysts today will be, are there any opportunities in this overwhelming moment? And in positive local news, we see that SABC's business confidence report has come up quite nicely by 3 points. This is business players are more confident about the future of the South African economy. That's good news. Let's take a look at the indicators. I'm joined by Travis Robson. He's from IG South Africa. Thanks for joining us, sir.
Thank you.
Good stuff. To me, it seems illogical that we're in an environment where global growth is said to be steaming ahead, and yet the companies that are going to be underpinned by that very growth are being sold off in global equity markets. Do you understand the rationale of why we're seeing a rolling sell-off?
Firstly, I think the sell-off is exaggerated by algorithms. We've seen a lot of algo tradings coming through last night that obviously pushed a bit of panic in the market. And that an algorithm can just be an aggressive robotic trade that pushes the market down lower. And that just increases the negativity, and then you see a massive sell-off. This stems into the Asian markets, and then it obviously stems into our markets because we follow Asia. Asia follows America. And this is similar what the pattern we're seeing at the moment. Coming back to the American markets and the sell-off, Janet Yellen made it very clear that the markets are all-time highs. We've seen the markets push to record numbers consistently over the last year and the beginning of this year. And so it is due a bit of a correction. This is 5% correction on the Dow. It's relatively small relative to the gains we've had. But we're also going through an earnings season as well. So analysts are digesting the company numbers individually. We had a sell-off on some heavyweights like Apple. Apple reported for first quarter of 2018 weaker sales numbers. Apple's a big part of the Nasdaq and the tech stocks, so that's obviously going to impact that market. That was over the weekend. We saw that news. So there's a lot of reasons. One, we've got big market sell-off due to algos. Two, we've got company earnings affecting the markets. We haven't even touched on the new Fed chair coming in and the hawkish stance for the possibly with interest rates rising, which is also going to put pressure, and it's going to flood U.S. Treasury, which is basically cash. So these are the factors that are affecting the market overnight.
Indeed. Now, when there is a sell-off in global markets, it brings about opportunities, doesn't it, to buy good stocks at lower prices. But given that this sell-off seems to be ongoing, it's been running for at least 3 days now, at what point does one decide to take advantage?
Yeah, so a lot of Europe and America is actually in their fourth consecutive sell-off, so it's hard to pick the bottom. There's an old saying, bottom picker is a cotton picker. So, maybe it's worth waiting for some stability in the markets. I think it's important if a trader is looking at it, individual companies, he would be looking at the valuations of those companies. He would be going back and doing some research on those companies. And, I think the longer you hold a stock, the more you iron out that volatility, and you should be used to these pitfalls and troughs in the markets. If you're a trader and you're trading the Dow itself or currencies or commodities or other indices, then you'll be looking at support resistance levels. What does that mean? Those are previous lows that the stock has touched or the index has touched, and that would be what we determine as support level for possible buying. And you'd be always prudent when you're trading shorter time periods, have a stop loss. Especially relevant in what we've seen with Bitcoin and the move back to 7,000.
Indeed. And when it comes to emerging markets like South Africa, we know historically we've enjoyed the benefit of quantitative easing. Lots of money is sloshing around the global economy. That's seemingly beginning to be withdrawn. And of course, higher interest rates in developed market regions. So what does this mean for emerging markets like South Africa from a bond and equity markets point of view?
I think from South African point of view, we're more, investors are more concerned with our political uncertainty, with what's happening with the state of the nation, with what's happening with Zuma. We've got SONA coming up, which is very, very important to discuss our budget. So investors will be looking at that closely. We've also got, elections coming just around the corner. So there's talk on that. Ramaphosa did very well at Davos in reassuring foreign investors to what their perceptions on South Africa. So I think investors are going to be watching his reaction and how he deals with Zuma and other cabinet members around the issues of corruption over the next coming weeks. And I think, although I know you look at emerging markets and you want to look at bonds and equities, I think it's very important to look at our political scenario, and I think that is the driving force behind if foreign investors will invest in South Africa. It's
a very tall order, isn't it? I mean, I mentioned business confidence shooting up to nearly 100 points, which is a big deal. But obviously, there needs to be follow through on the promises, on the policy certainty that's being promised, etc., etc. If it isn't, presumably that will have an impact on the rand.
Yeah, business confidence can be up at all times high, but if you've got a negative growth rate, then what's driving growth? Not a hell of a lot. And I think yes, this government's working very closely with corporate business, and that's very important. But when we need to stifle out corruption, we also need the access of funds to be well managed to state-owned enterprises. It doesn't help an article yesterday with the PIC giving a bailout to Eskom, where that fund's coming from. Is those pension funds linked to people's savings? It's making people a bit jittery. So, state enterprises need to be sorted out. The relationship is very key with the private sector and government. Obviously, what's going to be very key is SONA and how much cash is available from the government spend. Are they going to put money into private enterprises? Are they going to put money into SMEs, because that's what drives unemployment. We've got the highest unemployment rates. So these are things that people are going to be digesting following SONA.
And very quickly, should pension fund members be concerned about the PIC's move, given the fact that they are entitled to what they call defined benefits?
Well, that's a bigger question that I probably don't have the right answer for, but I would be watching that closely. I think in general, South Africans are quite sensitive with the Viceroy incident, with Steinhoff, with Aspen, with Capitec. There's a lot of headline news at the moment, and I think investors are very, very cautious. So I'd be watching that very closely to see the impact of it. Certainly, if my pension was linked into that, and it's not, I would be quite cautious and be watching it closely.
Indeed. Well, thank you very much for your time, as always. Travis Robson from IG South Africa saying that those who are affected by the government employment pension funds should keep a very close eye. And we do know that union representatives have already made representations saying that they're not happy about the PIC move. After a short break, Nzinga has more business news for you.